Hey there, everybody. DGI Crab here. Happy Saturday to you. It is July 6th, 2024. And on Saturdays, if there are any dividend increases amongst the 60 quality stocks that this channel covers, I will bring it to you on Saturdays. And we've got two of them here today that I am happy to report. So JP Morgan recently went ex-dividend and paid out their dollar, and will be paying out their $1.15 per share. They were scheduled to. And they have now announced that starting in Q3, they are going to increase that dividend to $1.25 per share, or annualized $5 a year. This is an increase of about 8.7%. Just exactly what we want to see out of a stock like JP Morgan in our tier 2 category for stocks for the 31 to 41-year-old investors, where we are looking for stocks that yield in the 2 to 3% range and have a high single digit, so 7 to 10% range of annual dividend increases. And JP Morgan is falling right in line with that, just like we would hope or expect out of the world's largest bank. And they also announced that they are going to do a common share repurchase program starting July 1st of $30 billion. Sounds like they can sort of pick and choose the times that they buy back their shares, but this is typically really good news for investors, as it'll be good for the share price overall. If JP Morgan stock starts to drop, they'll just jump in and start buying back their own shares at what they deem would be a good price. So maybe not good news if you don't own any JP Morgan and you were hoping to eventually start a position in it. It may not be a stock that's looks to be trading at fair value for a little while if they're rebuying shares. But for the current shareholders, you've got a share rebuyback program and a dividend increase that falls right in line with where you want it to be. And then we have a second one here from Realty Income. Realty Income for our tier 4 investors, age 54 and up. Is it earth-shattering great news? Well, no. They've increased that monthly cash dividend from 26.3 cents per share from 26.25 cents per share. So just a fraction of a penny. The annualized dividend return goes up from $3.15 per share to $3.15.6 per share. So this is just a 0.19% dividend increase, but Realty Income increases that dividend every quarter. This is their 126th monthly dividend increase. Now, each quarter they will do an increase, and sometimes it's a little bit bigger, sometimes it's a really tiny one like this one, but usually over the course of the year you're looking at about anywhere from maybe 2% on the low end to maybe at the very high end 5%, but usually it's about a 3 to 4% annual increase once you compound up the 4 increases that they do over the course of the year. So Realty Income has been the number one undervalued stock on my tier 4 list since we've started the channel here. It is not necessarily a screaming buy at this point, but it is certainly a very solid buy, yielding just at about 6% or slightly below that. And what we want to see from Realty Income, whether they're bigger increases or just little small increases like this, are that they continue to increase that dividend. The share price has been beaten up. Tough time for REITs with higher interest rates. And Realty Income, what we want to see out of them is just continued steady increases like they've been doing for multiple decades, and not providing a cut or flatlining that dividend. So I don't need to see massive yearly increases from Realty Income. I just need them to continue to be nice and steady, do what they do on a scheduled basis, and continue to provide steady, reliable, dependable monthly dividend income to shareholders, which is exactly what our age 54 and up investors need, so they can live off of their dividends comfortably and not lose a lot of sleep at night thinking that they're going to get a cut in pay. So that is the update here on a Saturday afternoon. I will be back in on Monday to talk more stocks with everyone. Check out the links in the description below to a video on each of the 4 tiers of stock that this channel covers, and I would recommend focusing on the one that is that covers your particular age, and we'll see if there's any good values in the market as we go out throughout the week. So my name is Colby, the DGI Crab. The opinions expressed in this video are just one crab's opinion, and you should always do your own due diligence and research when you are looking to invest in any stock, any ETF, any security. Thank you so much for tuning in, and I will see you next time.